So I would like to begin with our first presenter in this session, who's Jonathon Trewartha, the Chief Executive Officer for Lincoln Minerals, with his talk aiming to be the first new graphite mine in Australia. Please welcome Jonathon.
Thanks, Peter. Good afternoon, followed straight after lunch, so it will be a good one. So we're Lincoln Minerals. We're aiming to be the first graphite miner in Australia. So Lincoln's got effectively four products. It's got the graphite mine at graphite development at just outside of Port Lincoln, about 25 minutes north, which we are developing we've just finished our PFS. We've got magnetite, the 1.2 billion tonnes, also on Eyre Peninsula, that's at PFS and has done its baseline environmental, which we are looking for a partner. We're not going to develop that until we actually get a partner. And then we've got our uranium projects, which we've put out for an expression of interest. But I'll go through all of these, but I'm mostly focused on the graphite because we've just released our PFS, and our PFS is a cracker. It's it has been it's one of the better ones I've seen, and a group of us did it, so it must be. No, so it's basically got good economics. It lines up to being line of sight for first production because it's got a cash flow positive throughout the metal cycle and low capex at 29 million. It's got plenty of upside. Funding strategies are a combination of multiple through government, through equities, so it can be funded through a lot of different ways. And there's a group of us who've done it before on the projects. So see, my eyes can't see that, so I'm going to look up it here. So this is one of my favourite slides and one of my favourite matrices. It's how I evaluate most projects. So I'll just move here because I really can't see that screen. So the main things, if you're looking at a project, you look at jurisdiction, financials, the credibility of the project, financeability, and then geology. So the project is in the right jurisdiction, especially for critical minerals. The Koreans, for the Koreans, for the Americans, for the Europeans. So we've got the right jurisdiction. Our approvals were already on a mining lease with 6 years of production on it, and we're well advanced with the peppers. And the other ones are a great economics of 41% IRR. Now, one of my favourites is the MPV CapEx, and that's an indication of how well you use your capital. So most projects good projects fall between the 1 to 1.5, and we're well and truly above that at 2.2. It's a small MPV, but we've deliberately throttled back our project to meet in critical minerals, you have to make sure your sales equals your production. Otherwise, you have a huge warehouse of material, which therefore you go broke. So we have got a modest MPV, but a good one for a company that's valued at the moment at $12 million. We did a conservative project. The one I'd like to also highlight is our product to market size ratio. Once again, we don't want to enter the market and flood it 10-15%. We're actually aiming for 1 to 2% of that market at full production. So we're not disturbing that market, which we throttled back the project for that. And as I said, 29 million for CapEx, 16-year mine life, so that's a good enough mine life and plenty of upscale. With the graphite space, there is the traditional market, which is the industrials, the space, the lubricants, the steel foundries. There's also the EV market, which is well known about. Now, the traditional markets works at 4% growth. The EV markets has got about 20% growth, and that's the real opportunity, is to sell into that space. We've decided we're agnostic. We're going to sell it to everyone and de-risk our assets. Currently, for prices, and I will touch on the synthetic, currently the prices are for EV low, and that's because of synthetic material from China. Batteries need both synthetic, which is made from oil and high energy, and natural graphite. It's a 50-50 mix. So, but at the moment, the Chinese overcapitalised in their synthetics, and that's driven the price down. And that won't correct for another year or two. That's why we've gone for the industrial market first, which is double the price. Now, I went through Europe talking to governments and also the Australian governments. They are so firm on getting off diversifying the supply chain. Personally, I think the levers they've got at the moment are ineffective, but they are that determined that there is more and more support coming down for critical minerals. So I'm happy to be in this space. There is already a price difference occurring between Western graphite and China graphite, and I'm expecting that to grow. So our project, why do I believe we're going to be the first? Well, we've got a high-grade core at surface at 16%. So that allows us low strip ratio, low operating, and we can really build our customer base in those first 2-3 years. We're also surrounded by infrastructure. I mean, we've got power only 6 k's away, water's only 13 k's, roads in front, regional airport 20 minutes away, and 3 regional towns only 25 metres away. So our capital cost startup is very low. So that's most of what I'm going to talk about the project. We've got plenty of upside. In the last 12 months, when I only joined in November, we doubled our resource, which allowed us to do this PFS. But we've got plenty of upside for our resource. With most of the infrastructure still is all on the existing mining lease, and there are 2 small pits outside of that, and 2 of those pits are going to be backfilled, so it's a low environmental impact. And this is what is another real attraction for me, is that we're above the cash flow. For the industrials, and as a comparison, because you're saying, well, anyone can use any price, there's Northern Graphite in Quebec that's getting a price of about $1,400 US, and South Star, which has just started a mine in South America, they're at about $1,200, $1,300. Now, so we used 800 and 1,000, so we're comfortable our feasibility is reasonable. And there's plenty of upside. I mean, we're at the bottom of the metal cycle. We're making money, and we'd make money today. But even if you put in today's graphite prices by the other mines, that's double or triple the MPV. So it's a good, solid project, and I'm looking forward to developing it over the next couple of years. So it is a great Tier 1 location, standard processing, high-grade resource, and robust economics. I'll now touch on our other projects, the magnetite and the uranium. So we've got the best undeveloped magnetite mine in South Australia. Now, that's a bold call. I know Larry's over there, and he'll be saying, that's very bold, Jonathon. But in terms of SAEMC's got the best magnetite project in South Australia. It's got about 1.4 billion tonnes, close to infrastructure, 32% grade. We've got 27%, and it produces a good clean con at 68%, and it's surrounded by infrastructure. The previous Centrex previously had Chinese customers which were happy at 6% silicon. Direct reduction needs about 2%, but luckily there's been so much test work on this project that it clearly shows that we can get down to that 2% of the product, and it's without flotation, that test work. What blew me away about this was all the work. The two Chinese steel companies spent 70 million on it, and then the rest of the companies in the state had spent about another 30. So the PFS is done, the baseline studies are done, the studies are from 1.5, 5, 10 and 3. They're all done. So we just need a quick refresh and then we're into DFS. And it's that infrastructure. The big change since so in 2011 to 2015, the metal price was falling. It got down to about $50 for the iron. So the difference between now and then is, one, the metal price, two, it's magnetite is a sought after material, but then there are now two new approved but not built ports. Cape Hardy is one of them. The state doubled the power line, 132 kV, which runs over our tenements. There's a hydro plant that's now going to be built, and hopefully there's going to be 2 hydro plants. So there's been, and then the renewables. So there has been a massive change in infrastructure, and there's now political will under the green iron and green steel. So South Australia is well placed for magnetite projects now. In terms of our uranium, I won't go into that too much because we've put out an expression of interest. We've got a 42-page deck of our asset that we put out about 4 weeks ago because you can't do everything. So we've just put it out. I mean, we've got drill holes in every project except for the Yolanda. We've got most of them, we've got economic mineable grades in all the projects. And I'll briefly touch on, so this is down south near Port Lincoln. There's potential for shear-hosted paleochannel and unconformities, and that's the radiometrics. So we've got the right rocks. This is Arandi, which is near it's 60k south of Whyalla, and that's where it was a SAREG success. We found in SAREG, or I didn't, I got some amazing geos. They found a reference about a quarry that had yellow rocks that got closed down, and effectively it turned out carnite, and that was closed in 1942. We've taken the samples, and it's looking very attractive there. Just on this slide, about halfway up that lease is one of our copper is a copper hole that we're looking at now. That's 29.5 metres at 0.8% copper, about 8% lead, 2% zinc, and silver and gold. And that's quite an exciting hole for us. It's sort of in isolation, and there's 12 metres at 1.6% copper. So that's another story that we'll be focusing on in the short while. And this is Jungle Dam. It was drilled. Unfortunately, a lot of the composites were 4 to 6 metres, some 2. So I think it underrepresents Jungle Dam, which is another of our projects. And we've been using, because there's so much money and so much data done by the South Australian government, Centrex and everyone, we're just coming along and using that data that was done in the last 10, 12 years. And we put out those drill holes against iron ore gravity survey, and you can clearly see the paleo channels. So there's a lot of opportunity in our peninsula. And thank you very much.